Hi, I'm Nick Williamson. I'm a founder of Qadre, a startup that has been building blockchain infrastructure here on the island for the past almost 6 years now. And also of Mirror, a recent spin-out from Qadre, where we have taken a lot of the lessons that we've had from building financial and insurance infrastructure using blockchain, and then widening that out into how do we approach compliance more fundamentally, and trying to find a way of embracing the fact that a lot of documents, a lot of the information that we use in compliance and that we use for identity these days is actually natively digital rather than what we traditionally rely upon with paper documents, wet signatures, and what have you, and that instead of that being a challenge for having secure onboarding and anti-fraud processes, rather that it allows us to actually better verify the bits of information that we rely upon for these systems and these processes. So today I'm just going to talk a little bit about how we ended up working backwards from all the challenges we saw in building financial systems and insurance systems, and ended up recreating how we think of identity, KYC, and due diligence kind of from the ground up, and in a way that's still compliant with especially UK law, but also law here in the Isle of Man and in most jurisdictions that follow similar AML regimes. Go to the next slide. Great. So ideally, compliance is something that we use in order to align incentives between the regulator, the customer, and the business, whether that's a law firm, a e-gaming service, a bank, so on and so forth. In practice, it really just serves as a gatekeeping function these days, where we have processes that we follow and paperwork that we file, and it ends up being really a tax, both a time tax and a direct monetary tax on the most important businesses and utilities that we use, from finance to government to insurance, and even potentially less important but still very enjoyable activities such as e-gaming. And so when we started looking at this, we thought about how do we reframe compliance instead of it being this checklist we follow or this set of processes that we follow tick boxes and that we check off the list. Instead, how can we look at compliance as a series of facts that we're trying to assemble that give us comfort that we can move forward with a given transaction, whether that's onboarding somebody into a law firm, accepting a player's money as a deposit, or facilitating a transaction. And we looked at the ways that we use documents these days as a proxy for those facts that we're trying to achieve, and how can we more fundamentally get to the root of those facts directly. So we use copies of passports as a proof of identity. We use a copy of utility bill as a proof of address. And often we forget about why we do so in the first place, that we're relying on these independent third parties to make vouches about aspects of an individual or a company, and that we've often viewed in most regulated industries the fact that these vouchers now don't come in the mail with a seal on them, but instead they live as PDFs in a server somewhere as something that makes these processes harder and that makes it less secure, because we don't have what we've always relied upon, the actual physical document or a piece of paper in our hands, and the knowledge that it's hard enough historically to forge these documents that it gives us some assurance that we're actually dealing with the person or entity that we would like to engage with. But in reality, the fact that these documents do live in these servers and the fact that increasingly things like identity documents have biometric chips and other very high bars to forge the electronic signatures associated with the document, but actually relatively low bars these days of forging the paper version of those documents has actually kind of flipped the traditional feelings about what is secure and what isn't on its head. But we're still acting as if the fact that we're holding a document gives us some security because it gives us comfort that there is something tangible there. And so what we've done is we've looked at how can we take the digital signatures that are associated with these documents and actually just offer them up directly to the firm trying to onboard a client. So in the case of a passport, for example, that's fairly straightforward. It comes with a chip, and there's already a lot of services out there that do the scanning of the chip and the liveness checks and the selfie checks and everything else. But in the case of other documents, what we've done is we built a system that allows us to verify the digital signature that comes up every time that you see a little green padlock in your browser where the browser is using SSL to secure that connection between the person browsing the website or logging into their utility provider or bank, and that also validates the identity of that service provider. So what we've done is we've built a tool that effectively allows us to capture those documents and verify both the originator of the document, but also that the person themselves that we're trying to onboard is authorized to access that document, so presumably is that person, and all without compromising security for either the user or the server itself. Could you go to the next slide, please? And so the reason that we've done this is that we realize that even though costs of compliance are rising year on year, all we've been doing is just kind of piling on more of the same. We've been saying that the situation's getting worse. Fraud's rising. It's getting easier and cheaper to commit fraud on vast scales, especially with things like ransomware attacks, with new scams appearing every day, such as deep fake voice simulators that, the stream that's being broadcast today, somebody could go and there's going to be enough audio in there for somebody to replicate my voice and spoof my phone number to my financial director and make it sound like I'm really urgently saying that I need to authorize a payment. So it's getting more and more difficult for us to address these sorts of frauds, whether it's an actual fraud or whether it's a misrepresentation that falls afoul of regulations and is also gaining a lot more regulatory scrutiny in almost any regulated area at the moment. What we've been doing is we've just been saying, okay, well, the effectiveness is going down, so we need to spend more money on this process. We need to have more checklists. We need to buy more solutions. And what we have been working towards is how can we actually remove the unnecessary things that don't actually provide us with any additional security. They just give us a security blanket that make us feel like we're doing something but don't actually get to the root of the problem. And in doing so, how can we then allow the people who are operating the compliance process to concentrate on the parts that are more nuanced, that are higher up in the value chain? So instead of somebody trying to look at a PDF of a utility bill that came in as an email attachment and saying, I think that looks good or I think it doesn't, instead they can look at, does the story of what this person's trying to accomplish, where the money's coming from, and the profile of who they are actually makes sense. Does it hold together? And are we making the types of decisions that are coherent both with the customers we want to serve, but also with what the regulator is going to be happy with? And so that's exactly what we've been trying to build, and it's the work that we've been doing in blockchain for the past 6 years that's helped us work backwards to that. So as I mentioned before, a lot of the services that we were building in blockchain were in the financial industry. And a lot of these, rather than some of the more app-based fintech services that you've been seeing over the past few years, instead, the approach we took is we went to more fundamental infrastructure providers. So sort of the financial plumbing that runs 11, 12, 13 layers deep underneath the systems that we use on our phones or on our computers or when we walk into a bank branch. And instead, what are the rails that are underlying those systems, and how can we help go in and build something foundational that then makes the layers on top more coherent and more able to interoperate rather than building up silos for each new thing that comes along. And what we ended up finding out was that the benefit that we actually saw from blockchain isn't what a lot of people are talking about or writing about, in that it's faster or more efficient or decentralized or whatever the current buzzword is around DeFi or NFTs or what have you. But instead it was around how do we take processes that onboard real world data about the physical world and about relationships between people and organizations, and how do we then make that reusable instead of having to go through a unique onboarding process for that information every time that data needed to be used or accessed. Because that was a recurring problem we kept seeing, that you may have the most robust onboarding process ever, but if you're relying on, for example, an experience search that somebody else has seen the same information as you, and so that gives you comfort, how do you know that that company that reported to Experian that they were happy that John Smith lived on Main Street, that they had robust processes that actually were able to validate that information? And instead, what we're trying to do is narrow the onboarding points of that information, make sure that they're very strong so that you have a vanishing amount of chance of a fraudster actually getting bad information into the system, and then wrapping it in a blockchain construct that allows us to reuse it effectively, building a certificate for these individual facts that then the individual or the organization that those facts are about, they can then present them to various service providers. So we're actually allowing the user to hold on to their data, but in a way that we're not actually relying on them not to tamper with it, because if they tamper with it, it's going to be very obvious very quickly what is happening, that they've swapped out information, and then our systems will flag that up. One more slide, please. So that's really the theme of what we are working towards and what we've been building to, is that compliance is in a tailspin. We have started going off the rails, and every year we just try to keep adding more and more complexity and more cost to the process, because that way we can at least demonstrate that we're trying to fix the problem, even if at almost every step of the process we feel lost in doing so, and we don't necessarily know how our actions are connecting to the impact we're having. And I think that the approach that we've been working with both industry regulators and others on how do we go and, instead of seeing the fact that old processes are breaking down as existential. Instead, look at the core reasons for why they're breaking down and try to take advantage of the strengths of those, namely the fact that the increasing trend of paper documents and in-person verifications are getting easier and cheaper to provide fraudulent information, get fraudulent information through a system or a process is a fact, and the increasing number of the types of data that we rely upon and the types of verifications that we rely upon becoming prevalent throughout almost every individual now, and almost every company having these digital documents available to them because of the push of paperless, because it saves money for the utility companies, because of the prevalence of electronic IDs as everybody needs to renew their passport every 10 years, and other documents are increasingly having chips put in them that can be verified remotely to a standard that's much higher than even a skilled compliance officer seeing that same document in person. And really just embracing those two facts so that we can build up the thing that we're actually trying to accomplish from scratch, that we are actually getting that core information about who a person is, where their money comes from, and does the story add up that satisfies us and satisfies the regulator as to why we're happy to go and do business with this person, but in a way that also means we aren't spending time or other resources on processes that may make ourselves or a regulator feel more comfortable, but that we know don't actually add to the process, because compliance is a security function as much as it is anything else. And in any security field, if there's a mismatch between what you're actually doing and what you think you're doing, that's when a bad actor can come in and take advantage of that mismatch in order to exploit your system, whether that be a computer system in the case of an electronic actor, or whether that be a human system in the case of social engineering or other sorts of fraud. Again, this has been the, I don't think you can talk to anybody who works in a regulated business and not have compliance as being one of the top problems that they solve day in, day out. It is fairly cliche, but at the same time, I think it's very much been demonstrated that if we're going to continue to do the same thing, we're just going to continue to get the same results. If you go to your doctor and say, "Doctor, it hurts when I do this," the doctor's going to say, "Okay, well, stop doing that." Thanks, guys.